Good evening. Here is your week ahead update for gold and cryptocurrency markets.
Markets are heading into one of the most important macroeconomic weeks of the year, with investors closely watching the Federal Reserve's interest rate decision and a series of announcements from major central banks around the world. For cryptocurrency markets, the Federal Reserve's actual rate decision may matter less than the message delivered afterward. While policymakers are widely expected to leave interest rates unchanged, traders will be dissecting every word of the Fed's statement and the chair's press conference for clues about the future path of monetary policy. If officials indicate that inflation remains stubborn and that rate cuts could be delayed, risk assets such as Bitcoin may face significant pressure. A more hawkish tone would reinforce expectations that borrowing costs could stay elevated for longer, reducing liquidity across financial markets. That poses a challenge for crypto, which has historically benefited from abundant capital and lower interest rates. Should the Fed signal that rates may remain higher through the end of the year, institutional investors could shift capital away from spot Bitcoin ETFs and back toward US Treasury securities, where yields remain attractive and risk levels are considerably lower. Investors are also monitoring a potential liquidity risk later in the week. With US banks and traditional financial markets closed for the Juneteenth holiday, trading activity is expected to decline. Thin liquidity conditions have historically increased volatility in digital assets, creating an environment where large market participants can trigger outsized price movements and liquidation events. Gold markets face a different but equally important set of challenges. As a non-yielding asset, gold often struggles when interest rates remain elevated. A hawkish Federal Reserve would likely strengthen the US dollar while pushing Treasury yields higher, increasing the opportunity cost of holding gold and placing downward pressure on prices. However, several factors continue to provide support for the precious metal. Ongoing geopolitical tensions in the Middle East, along with concerns surrounding the global economic outlook, are sustaining demand for traditional safe haven assets. Attention will also turn to economic data from China. Any signs of weakening growth could reignite fears of a broader global slowdown, potentially driving defensive capital flows into gold, despite a restrictive monetary environment. Another key theme for investors is policy divergence among central banks. If the Swiss National Bank, or the Bank of England, moves toward rate cuts while the Federal Reserve remains on hold, the resulting strength in the US dollar could create an additional headwind for gold prices, limiting upside momentum. As the week unfolds, many analysts will be focused on one critical indicator, the US dollar index, or DXY. A sharp surge in the dollar following the Federal Reserve announcement would likely signal pressure for both Bitcoin and gold. Conversely, if the Fed surprises markets with a more dovish tone and the dollar weakens, investors could see a broad relief rally across both asset classes. For traders and investors alike, next week's message is clear. Watch the Federal Reserve, watch the dollar, and prepare for elevated volatility across global markets.